So, how to buy Bitcoin? Investing in Bitcoin can seem complicated, but it is much easier when you break it down into steps. Buying Bitcoin is getting easier by the day, and the legitimacy of the exchanges and wallets is growing as well. Before you buy Bitcoin, there are several things that every aspiring Bitcoin investor needs: a cryptocurrency exchange account, personal identification documents if you're using it, a KYC platform, a secure connection to the internet, and a method of payment. It's also recommended that you have your own personal wallet outside of the exchange account. Valid method of payment using this path include bank accounts, debit cards, and credit cards. It's also possible to get Bitcoin at specialized ATMs and through P2P exchanges. However, be aware that Bitcoin ATMs were increasingly requiring government issued IDs as of early 2020. Privacy and security are important issues for Bitcoin investors. Even though there are no physical Bitcoins, it's usually a bad idea to brag about large holdings. Anyone who gains the private key to public address on the Bitcoin block chain can authorize transactions. Private keys should be kept secret. Criminals may attempt to steal them if they learn of large holdings. Be aware that anyone can see the balance of public address that you use. That makes it a good idea to keep significant investment in at public addresses that are not directly connected to ones that are used for transactions. Anyone can view a history of transactions made on the blockchain, even you. But while transactions are publicly recorded on the blockchain, identify user information is not. On the Bitcoin blockchain, only a user's public key appears next to a transaction, making transaction confidential but not anonymous. In a sense, Bitcoin transactions are more transparent and traceable than cash. But the cryptocurrency can also be used anonymously. That is an important distinction. International researchers and the FBI have claimed that they can track transactions made on the Bitcoin blockchain to users, other online accounts, including their digital wallets. For example, if someone creates an account on the Coinbase, they must provide their identification. Now, when that person purchases Bitcoin, it's tied to their name. If they send it to another wallet, it can still be tracked back to the Coinbase purchase, which was connected to the account's holder identity. This should not concern most investors because Bitcoin is legal in the US and most other developed countries. Step 1: choose an exchange. Signing up for cryptocurrency exchange will allow you to buy, sell, and hold cryptocurrency. It is generally best practice to use an exchange that allows its users to also withdraw their crypto to their own personal online wallet for safer keeping. For those looking to trade Bitcoin or other cryptocurrency, this feature may not matter. There are many types of cryptocurrency exchanges, but because the Bitcoin ethos is about decentralization and individual sovereignty, some exchanges allow users to remain anonymous and do not require users to enter personal information. Such exchanges operate autonomously and typically are decentralized, which means they do not have a central point of control. While such systems can be used for nefarious activities, they are also used to provide services for the world's unbacked population. For certain categories of people, refugees, or those living in countries with little or no infrastructure for government credit or banking, anonymous exchanges can help bring them into mainstream economy. Right now, however, the most popular exchange is not decentralized and do not require KYC. In the United States, these exchanges include Coinbase, Kraken, Gemini, and Binance USA, to name a few. Each of these exchanges has grown significantly in the number of features they offer. Coinbase, Kraken, and Gemini offers Bitcoin and of growing number of altcoin. These three are probably the easiest on ramp to crypto in the entire industry. Binance caters to a more advanced trader, offering more serious trading functionality and a better variety of altcoins to choose from. An important thing to note when creating a cryptocurrency exchange account is to use safe internet practices. This including using two-factor authentication and using a password that is unique and long, including a variety of lowercase letters, capitalized letters, special characters, and numbers. Step 2: connect your exchange to a payment option. Once you have chosen an exchange, you now need to gather your personal documents. Depending on the exchange, these may include pictures of driver's license, social security number, as well as information about your employer and source of funds. The information you may need can depend on the region you live in and the laws within it. This process is largely the same as setting up a typical brokerage account. After the exchange has ensured your identity and legitimacy, you may now connect a payment option. At most exchanges, you can connect your bank account directly or you can connect a debit or credit card. While you can use a credit card to purchase cryptocurrency, it is generally something that should be avoided due to volatility that cryptocurrencies can experience. While Bitcoin is legal in the United States, some banks do not take too kindly to the idea and may question or even stop deposits to crypto related sites or exchanges. It's a good idea to check to make sure that your bank account allows deposits at your chosen exchange. There are varying fees for deposits through a bank account, debit, or credit card. Coin, Coin, Coinbase is a solid exchange for beginners and has a 1.49% fee for bank account with a 3.99 fee for debit and credit cards. Step 3, place an order. Once you have chosen an exchange and connected a payment option, you can now buy a Bitcoin and other cryptocurrency. In recent years, cryptocurrency exchanges have slowly become more mainstream. They have grown significantly in terms of liquidity and their breadth of features. The operational changes at cryptocurrency exchanges parallel the change in perception of cryptocurrencies. An industry that was once thought of a scam or one with questionable practices is slowly morphing into a legitimate one that has drawn interest from all the big players in the financial services industry. Crypto exchanges today offer a number of order types and ways to invest. Almost all crypto exchanges offer both market and limit orders, and some also offer stop loss orders. Of the exchanges mentioned above, Kraken offers the most order types. Kraken allows for market limit, stop loss, stop limit, take profit, and take profit limit orders. Step 4, safe storage. Bitcoin and cryptocurrency wallets are a place to store digital assets more securely. Having your crypto outside of the exchange and your personal wallet ensures that you only have your control over the private key to the funds. It also gives you the ability to store funds away from an exchange and avoid the risk of your exchange getting hacked and losing your funds. Some wallets have more features than others. Some are Bitcoin only, and some offer the ability to store numerous types of altcoins. Some wallets also offer the ability to swap one token for another. When it comes to choosing a Bitcoin wallet, you have a number of options. The first thing that you will need to understand about crypto wallet is the concept of hot wallets. That means the online wallets, and cold wallets, meaning the offline or paper or hardware wallets.